The media narrative surrounding the entrance of institutional investors into cryptocurrency has long centered around waiting for the right platforms, the right regulations, and the right prices before a wave of institutional cash will finally crash into crypto. However, the real story is a bit more nuanced. The meaning of the word institutional has become somewhat warped within the crypto space, and the impact of high-volume investment on the space has become somewhat muddled as a result. At the same time, playing the waiting game for this institutional cash has caused the creation of platforms who can serve high-volume investors and institutional traders effectively, which is to say, serve them the way that they are accustomed to in the traditional markets. Recently, Finance Magnate spoke with Danny Kim, head of growth at San Francisco Open Exchange, or SFOX, about how high-volume and institutional investors are impacting the cryptocurrency space and what products and services they are actually using. SFOX specializes in providing access to high liquidity and the ability to trade large volumes. As such, the platform is used by institutions, international businesses, and professional traders. Danny, once again, thank you for joining us on the Finance Magnates Blockchain Podcast.
Thank you for having me, Rachel.
Yeah. So I know who you are, but can you tell our listeners a little bit about yourself and the work that you do and how you got involved in this crazy crypto industry in the first place?
Yeah, sure. So my career started actually in the traditional finance area and capital markets. Right after college, I graduated in 2007, and like any other kid, I wanted to get in the banking side growing up in New York. So my whole thing was to go straight into banking. So I went into State Street, worked out of there, doing hedge fund operations, and then went into BNP, into the interest derivatives side of things for a couple of years. And during that time, I've always had a love for technology, fintech especially, and in the background while I was working at the banks. And you'd actually be surprised at how much money like these banks have, and yet their systems are so archaic, and like the amount of money that they're dealing with and everything. During that time, I was actually just looking at and thinking about like new projects on like the tech front, and I was working on a tech startup that was pretty much calling like a e-commerce for independent fashion designers in New York. Because New York is like that mecca, yeah.
Yeah, okay, that sounds really interesting.
Yeah. So then when I went there, like the biggest thing though, when I was talking to a lot of these fashion designers, the first piece was like the hardest thing for them was setting up a website. The second thing was actually payment, surprisingly. Their thing was, every payment process when they use credit cards, what would happen is, someone would buy the goods, pay with a credit card, a month later or less, they get a chargeback. What happens is that not only does the merchant need to pay back the refund the credit card company, but then they also lose the goods. So it's a double loss for them. And that was the biggest, yeah. And that was the biggest ask. They were like, well, if you could solve this, then 100% we're gonna work with you. So I just went straight into it, started diving in, looking into like all these different payment mechanisms. And there actually wasn't a solution out there. Like everything was either you pay for it and then you lose it. There was no good mechanism. And then that's how I kind of like got into this rabbit hole and like finally came across. I remember I was actually in Penn Station and I saw this article on the Wire talking about crypto. I was on like the front page, and I looked into it. I started reading more, and I was like, "Holy crap! This is exactly what could fix it." And then the more I read into it, I was like, "Wait a minute! I'm no longer interested in my startup now. I'm kind of more interested in this crypto Bitcoin thing." and so that's how I kind of got into this whole thing where I learned more about it, thought it was really cool. And being in banking, I was kind of seeing how all the funds were being moved, and I was like, wait a minute, this is like a perfect transition for me to if I wanted to, like, outside of just doing my own startup, but going to another business, crypto makes a lot of sense. So I started like talking to other people, getting around, and then it turns out one of my friends in the same circle, Bobby Cho, was he was in crypto already. He was setting up he set up the first OTC desk in New York, and he was moving over to ItBit, which is now known as Paxos, becoming the first, and they were becoming the first regulated exchange. So he was like, hey man, like, you love crypto, you come banking, why don't you join me? I was like, hell yeah, awesome. I was like, send me. But the crazy thing was, I was like, can you send me a job description? So he sends me a link to Craigslist. And I'm like, wait a minute, man, this looks real
Of
sketchy.
course. Yeah, of course. It's on Craigslist.
I'm like, are you sure? And he's like, look, man, that is really sketchy, but the guys are legitimate. Come meet the guys that are 100% like good. I come in, meet the guys. I'm like, holy crap, like, hell yeah. I see the vision. I'm all for it. And I don't know what went through my mind, but even I guess like I immediately thought that I already got an offer, or I was like so excited that I knew I was gonna take it, that without even having an offer, the next day I went into my office, to my managing director's office. I was like, hey man, just wanted to let you know I'm giving my 2 weeks notice, because I'm moving to this thing called blockchain and Bitcoin, and I think it's the future.
Damn.
So yeah,
Yeah,
and,
you got
and,
a call and you answered it.
I saw Jesus.
Exactly. Exactly.
But what
Okay.
was crazy was like after I got it, I was like, wait a minute, do I even have a job?
You're like, oh
And
shit.
yeah, I was like, oh shit. And this is like, keep in mind, like this is like during the recession, like because graduating 07, 08, this is during the recession. So I was like, wait a minute, is this real? Like I don't even know. I call my buddy. I'm like, hey man, I really need to get this job now. And unfortunately everything worked out.
Okay, good.
Yeah. So like 2 weeks notice. It's actually surprisingly my MD was very actually for it. Like even though BNP is a very conservative bank, French bank, and I told him I thought there was gonna be some pushback, because and then he was like, this actually, if you're gonna make, like, he's like, you're young, and if you are going to make a decision like this is a perfect time for you to do it. And finance is going to change, so you should go into it. I was like, that's very encouraging. Meanwhile,
Hey.
like I tell my parent, yeah. Meanwhile, I tell my
Yeah.
parents though, who are traditional, Korean parents, they're like, what are you doing? Like, you should be a doctor, you should be a lawyer.
Yeah, I
Uh,
know. Yeah, that's like when I told my parents, yeah, I work for this company. We write about Bitcoin. They were like, what is that?
yeah.
Yeah, I can totally relate to
it's
that.
it is so funny that my parents did not realize what I did probably until like last year, until where Bitcoin became very popular in Korea, and then they saw in the news like, oh yeah, that's my son, he is Bitcoin. And I'm like, no, that's not me.
He is Bitcoin. I love it. Oh, that's great.
Yeah.
Yeah.
um,
Yeah. So now, so you made your way to SFOX, and can you tell us a little bit about your position there specifically?
yeah, so my business in there, I'm the head of growth slash head of business development. Given my background, I was previously the director at ItBit, and then head of sales at Gemini. So I had a lot of connections, and then seeing as the way the market moved, where institutional market, well, quote unquote institutional people are coming in, uh, SFOX, which was building which it was building the first U.S. prime brokerage for crypto. I saw that as a huge opportunity, right? Like a lot of people were coming in, and institutions were coming in, but then the market was so fragmented. And the next piece was, I was like, this market needs a prime brokerage model. And that's what SFOX was doing since 2015. They started Y Combinator. And there was actually just two guys, in a garage, literally
Hmm.
like your stereotypical, Silicon Valley startup. They came in through Y Combinator, which is one of the most, largest and most popular, successful incubators in the world. Um, and they had this idea that for them, you know, crypto is going to be a new thing, but in order for it to be adopted, you need infrastructure. Where infrastructure meaning that you need to make it very simple and easy and secure, like reliable and secure for anyone to buy. And in order to do that during that time was you had to open accounts at all these different exchanges, which was, hectic and crazy, right? Like you'd have to set
Hmm.
up an account in somewhere in Europe, and then Germany, and then in the US, and you didn't know where the hell you were sending your money. And then they were like, what big enterprise or big companies are actually going to do that? They're going to need one single platform. So they set that up, and then they were like, we needed someone, we need a business development person to help us grow. It was just them two and a few engineers. They are engineers by trade. So they were actually one of my first clients when I got into sales for crypto. And I was like, hey, like, let's do this. Let me join. I'll help build out your business development, build out the growth, and then let's do this. And that's what I came in to help build their book of business, but then also partnerships, and so forth. So that's kind of where I came into SFOX.
Okay, gotcha. So an SFOX is this cryptocurrency prime dealer, and it self-styled as a platform that provides professional traders and institutional traders with higher returns. So can you talk a little bit about how that's possible? How do you guys manage to do that?
Yeah, sure. So that's a good question. I think a lot of people have a hard time understanding it.
Yeah.
So the big thing is, because it's usually it's like if it sounds too good to be true, it can't be true. But
Right,
the
exactly.
thing,
Especially in this industry. Yeah.
exactly.
Mhm.
But the thing is, it's like this market is still very, very fragmented, right? And what I mean by fragmented is that there are so many different exchanges out there, and every single exchange or brokerage has a different price. And for you to capture that price, you would literally need to have money in an account at 10 or 20 different exchanges, liquidity providers, and monitor every single one in real time to see which one is the right one and capture that at that very moment, right? But because everyone's not as technical savvy, it's nearly impossible because it costs a lot of money, costs a lot of money, it costs a lot of resources to do that. So what we did was we created one platform where we aggregate all animation into one order book, so that in one single view you can see all the best prices. But then we also have our own accounts at every platform, so that when a buyer or seller does want to execute on our platform, we are basically sweeping it across every single liquidity provider exchange in order for you to get the best price. And that
Mm-hmm.
was the first model, where now you're able to, one, visualize and see exactly what the market activity is going on, where the best prices are. Two, also do a simple buy and sell where it just sweeps across every single platform. And then three, it removes that tech debt and resource debt, where you don't need to have and manage accounts every exchange. You don't need to onboard. You just onboard directly with SFOX, and that's it. And so this actually became very, very popular with, high net worth individuals, family offices, businesses, and then actually even like day traders, because what we saw was, as you aggregated and combined all these liquidity providers, there's a natural arb, meaning one exchange was actually was selling higher, and then someone I could actually buy very low, and then immediately take take that discrepancy.
Mm-hmm.
So we had a lot of day traders come in and start making, arbitrage trades. But now as this platform grew, we had funds come in, and then they were like, look, like this buy and sell works great for us. But then we actually need a little more because we have different strategies. We don't want to just buy $1 million and sweep it across the book. We want to, do it in a better way so it doesn't impact that market. So we built that algorithms that really catered different strategies. And then that allowed, and what we noticed was those algorithms actually improved your pricing, because when you do these orders now, when you buy or sell, $1 million or 10 million, normally if you do that on a single exchange, that would move the market, right? Because there's only so much an exchange can actually cover. But with these algorithms, we would then trick off the trades piece by piece, so that we're not moving the market, and that ultimately ends up giving you a better price.
Okay, I see. So that makes thank you for clearing that up. First of all, yes, yeah. So in your position, working with these institutional traders and providing them with the solution, I'm sure that you've seen things in the industry that other people basically only speculate about. So I'm wondering, specifically, what do you notice when it comes to the way that institutional professional traders actually, behave and interact with your platform versus, what the common narrative might be. And of course, the big narrative that's been dominating the space, for the last couple of years is that there's this huge wave of institutional cash that's like right around the corner. If we could just get the right platform or the right regulation or anything, it's just going to come marching in at any moment. So what has your experience been, with regards to that narrative? And also more generally, what have you noticed in the way that institutional and professional traders behave in the space that isn't necessarily reflected in the media?
Yeah, sure. That's actually that's a very good question. I think the first thing is that I think the word institution has been so bastardized in this
Hmm.
industry because
Okay, so yeah, what does that
everyone.
mean? Tell me more.
Yeah, exactly. Like what is institution? What do institutions mean? People could
Right.
continue using that so freely. Um, and to me, like institutions, institutions are really the big markets, like the large banks, the endowments, the pension funds. Those are real institutions,
Hmm.
and that I don't think we're going to see that for a while, to be honest,
Yeah.
because frankly, it's because there are a lot of compliance regulatory hurdles that they need to go over, right? The fact that every country's own government doesn't really have full clarity on how they want to approach crypto. And if the government itself doesn't have that full clarity and idea, then the banks themselves can't do it because they are reporting directly to the government, right? And the regulators.
Right. Hmm.
And so that's going to be quite a bit, because even like when I was working at the banks, like for any new product to come out, even if it was from the traditional sides of something that they've already traded with, like maybe like a mortgage bond or something, that still required a lot of different hurdles because there is a lot of hierarchy they have to go through of understanding the product compliance and risk systems and everything needs to change.
Hmm.
Now for the ones that are actually trading, like the businesses or independent trading shops, there is a large slew of those guys, right? Because the big thing is that they are independent. The regulation is a little bit more light, and clients is they're always all compliant, but like from what they were provisioned to do, it gives them a little bit larger a large spectrum, right? So for instance, like a
Hmm.
hedge fund. Um, if you were a hedge fund, when you initially raise money, you have an investor prospectus, which really states out exactly what you can and cannot invest in.
Hmm.
And so all these larger hedge funds that come in, they really can't come in yet unless they raise a new fund. That new fund, then we need to clearly clarify that this fund is going to be for the purpose of getting into alternative assets that are maybe a little riskier, including crypto and so forth. And then once the investors are know, then that's the fund that can do it. So that's why I would say like you see a lot more family offices, because they don't have like family offices, it's their own money, so they can spend it
Right.
however they like. If you are a trading prop shop, it's a principal fund, so you can trade wherever you'd like, and there's no stipulation to that. And then that's why you kind of saw a lot of these crypto funds come in, because these crypto funds were specialized funds specifically for crypto. So as investors, you knew exactly what you were investing in. And so you had those guys. Yeah, that's what you had from 17 to 18. All those guys come in, and then now, as the traditional markets, the traditional hedge funds, they are now raising new funds, setting up new funds that are capturing and specifically categorizing crypto so that they can get those exposures for the investors. And that's kind of what we've been seeing.
Okay, I
Uh,
see. And and I'm also curious, just about the products and services that SFOX offers specifically. So, what are the things that institutional and professional traders, these family offices, have responded to the best? What is the most appealing things to them, and how has that shaped your business model?
yeah, I mean, I think when it comes down to like these institutions or funds, a lot of it's being lost, right? When we tell them about the infrastructure of having them to only integrate into one platform, it's basically a turnkey solution where you get access to all these liquidity providers. You don't really need a tech team to integrate, because you can just use our web platform and use on the website. Or if you do have individuals, just need one engineer to connect to our API, and that's really it. That saves you about 3 to 4 employees of just integrating to every single exchange, or having an operations team manage all of that. So that got them very excited. That the whole simplicity of lowering their costs, because with any fund, performance includes cost, and if you can reduce that, that's very attractive.
Hmm.
But then once we started talking to them, they were like, we need more things. Like when they keep saying like we need infrastructure, I was like, what is this infrastructure? They were like, as a fund, market's changing, and we outside of those algorithms that you're providing in this single point of access, we need something called like separately managed accounts, right? And what
Right.
that mean on, and I was like, what is that? It was like, basically it's, we want to manage money on behalf of investors. Investors have, kind of changed their minds of investing into a pool of funds, not knowing exactly what activity is happening. Instead, what they like to do now is, create an account themselves and then invite a manager to trade on their behalf. So that
Hmm.
as an individual investor, you see exactly what's going on. You have full control of your funds, and then you can see the trading activity that your manager is doing. And it's actually that actually became very, very popular. One of the reasons why we created it, because they were like, like it kind of it also kind of goes in line with what crypto is. It's becoming more decentralized and being more open, right? And seeing the transparency. So like investors kind of want more transparency in what they're investing in, and so that's kind of part of that infrastructure that was very exciting for them.
Okay, I see. And what has been the most exciting thing for you? Maybe not even necessarily within SFOX. Of course, I'll ask you about what you guys are
Mhm.
up to next, but within the space, more generally, what is the thing that you find the most exciting at the moment?
Yeah, I mean, yeah, it's kind of, you know what is really exciting to me. I mean, you know,
Yeah.
because there's actually so many things going on. But
Yeah.
I guess one thing is really like the actual use case of financial institutions using blockchain and crypto, right? Well, let me break that out. So the first
Yeah.
piece of crypto that was very, very exciting to me was, what I loved about the ICO market, outside of all that shilling and that terrible, like, people raising on like BS, was the
Hmm.
fact that it gave everyone the opportunity globally, anywhere, to invest in whatever they wanted, right? And then that having that sovereignty of power of, no longer having these group of investors only allowing these group of investors to invest, but allowing the global market to invest. I think that was the coolest thing in the world, because that this entire big world just became so much smaller, being able to see who can invest in. And I thought that was part, and I think there's still a lot of development need to be done there. But that whole idea, um, I still want that to grow, because that's one powerful thing to have, where investing and people earning has always been so siloed. But now you have like all these new DeFi projects where it's like saving accounts where people are able to earn more funds outside of what they are, pretty much, traditionally, only able to access in their local governments. But now they can do this in a more decentralized way, is very, very exciting, right? Like that whole DeFi movement, and I think it still has
Hmm.
a long way to go. Um, but if you are in a terrible economy, but you invest in crypto, and then you can put it into a saving account, you can earn a pretty healthy interest, interest
Right.
yield on it. But you got to be very careful, right? Because the thing is,
Hmm.
like, all these platforms are still relatively new, and there is still a lot of credit risk. Um, so if anyone's looking into these, like, they should 100% look into and do their due diligence on knowing who the people are, and making sure what's going on. Because what happened in crypto last time was, once everyone makes a lot of money, everyone gets very comfortable with everything, and like, all right, I can send money here and there. But then when things go sour, things go down really, really, like, when things go bad, it can go bad fast.
Yeah, there's not a
So,
lot of protection.
right, exactly, and it's still new. And the thing is like, I was actually on a panel earlier this year. I mean, sorry, last week, and we were talking about DeFi and, like, how do you build trust and everything. And the thing is, like, you know, trust is built over mistakes. I mean, we kind of saw this through crypto. Like when the exchanges first happened, there were so many different hacks and everything. And even like big names like Bitstamp and so forth had issues, and they had mistakes, lost a lot of money, but then they rebuilt it. And unfortunately, there are going to be those times where you know you do lose money, systems do go down, and they have to rebuild back up. But and that's what I'm going to say and see with DeFi, is that we still need to see those troubles, and then it's going to come. So that's one area that I find very exciting. But then the other piece is like financial institutions. Like, I think like Paxos, Ipit just released um, their go live between executing a security transaction between Credit Suisse and SocGen, I believe, on the blockchain, which is so damn cool, because me working at BNP back in the day was those transactions were so archaic and was so painful. Like we would be marking things on spreadsheets, and banks would actually be losing millions of dollars because somebody typed in the wrong digit or put the decimal place in the wrong place.
Oh my
And that would
God.
just, yeah, and it's
What
crazy.
a nightmare. Yeah, that's awful.
So those are the two things I've been really excited about.
Okay, yeah. And so what's on the roadmap then for SFOX over the next year?
Yeah, I mean, part of it is, we're planning to expand our presence. So, we've opened up our Singapore office. And we're looking to expand that exposure. And then we're looking to add in more products that our clients want. Our main thing is, we want to be we are wanting to be the most simple, secure, and reliable place to trade or access to digital assets, right? And that's very broad. But we want to be with that, that becomes creating a very strong layer for all these businesses, institutions to make it very easy for them to get in and out of crypto. So, we're opening up our Singapore office, expanding that exposure. We want to add in more products because you do see the derivative side getting very, very popular, and the lending side of things as well. And so we're looking into those things too. And then as we hear more wants and needs from our clients, building out further into our separately managed account services, adding new algorithms, even adding in more liquidity providers. That's part of that whole picture for 2020. We recently made a partner with B2C2, which then creates a actual better price discovery for the market. Right now, exactly what OTC prices are, which was typically only for high net worth individuals or people trading $50,000 or more. And so we want to add in and improve that price discovery by adding in more OTC liquidity providers so that the market has a general sense of what actual true price is. And maybe hopefully we get an ETF go through because of that. So that's what it is.
Yeah, right. Very exciting. And yeah, I just want to ask you really quickly. So Singapore seems like it's really, really coming up as like a new crypto fintech hotspot. Is that why you guys chose Singapore as the next place to expand?
Yeah, I mean, there's a couple of things in Singapore, right? I mean, it's probably one of the international, it is the international hub for finance, outside of crypto, just generally, right? But then the other piece is they've made it, like the government itself has made a very good, a clear, defined area of how to regulate crypto and other other products. And so that makes it a lot easier for any business to get involved in doing business. We know that there's a lot of crypto companies there, and for good reason. And then having that clarity on what you can do, what you can't do, what the rules are, makes it a lot easier. And that's that's kind of one of the driving reasons.
Okay, yeah. Well, Danny, thank you so much for your time. It's been a genuine pleasure to talk with you.
Likewise, thanks for having me, Rachel. It was a great conversation.
Yeah, definitely.